weekend all. Ira Epstein of Linn and Associates with your weekend edition of this metals market update. And this is for Friday, the 11th of October, 2019. And we're just after 3:48 p.m. Central Daylight Time. Now remember, I do this all by memory. We just had a news conference with the president 15 minutes ago. From what I understand, we have reached an agreement to agree. China's calling it a pause in the trade war. The U.S., the president specifically, thinks we have an agreement to agree to start writing up what both sides think occurred, put it on the paper, and get to that point 3 to 5 weeks from now, hopefully. It's in phases. This is what's being termed phase one. There will be a phase two if we can get this thing agreed to in the phase one on paper. The president said there could be a phase three. Intellectual property, parts of it are being addressed. The president said it's resolved. I don't buy that at all. There's a lot to talk about there. Currency issues, they're talking about that. Trade, $40 to $50 billion of agriculture purchases. We don't know over what time frame. We don't know what's being purchased. There's a lot of unknowns is what I'm getting at for you. And what we think we've got, you have to remember what happened just before the summer began. We thought we had a deal in principle there as well, and once it got down on paper, you know it fell apart. Let's see where it goes. And I'm not trying to be pouring cold water on this, but I've been here before, so have you. Stock market rallied dramatically on the news. It's given up about 210 points of that rally in the Dow. It's given up about, 25 points in the S&P. The gold fell on the news as they kept tearing it down to 1478. It's made a big rebound. And the silver market is basically unchanged for the day, down 3 cents in the last quotes. These will not be the settlement prices, but it gives you an idea where the real market is right at the end. And the reason I say that about metals, I hate how we determine settlements at the CME group. They do it by looking at the 12:30 price, Chicago time, 1:30 Eastern. Then the market goes on to 4 o'clock. I don't get it. Let's take a look at the monthly chart. In the monthly chart, momentum has gone up and flattened out. That is not bearish. It is still, in my opinion, to the upside. It has not yet made the turn to the downside. The market was up and over, and we had talked about this on the monthly chart. It got up here, right over the monthly. Week 2, you can see how the market was climbing over the upper Bollinger Band. Week 3. Then we started with the correction. So after 3 weeks up, we had our first break on a monthly chart. And this month is only, folks, we're only at the 11th. I don't know where the month's going to end up. On a monthly chart, if you pull back, there's support all the way back here at 13.15 to 13.17. And while it would be terrible on the near-term prices, that doesn't do any damage at all in the longer-term chart. That's my point. Let's now take a look at a settlement only on weekly charts, because that's what we do at the weekend edition. We look at one monthly chart, and then everything else is weekly for the bigger picture. My eye catches this. As long as I'm over the 18-week average, on my filter of other technical indicators, I say the market has upside bias. And I certainly realize we're in a corrective mode that has gone down roughly $44 on a settlement basis from the high close. That does not mean the bias is turned down. We're in a correction mode at this point. When we come to the weekly bar chart of action, you can see where the market peaked out. We came into this corrective area, and when I put the swing line on it, and what the swing line does, just so I review that with everybody, the swing line looks at this week's action. If the market, and I've set 5 rules, it looks to see do we have an inside week, which this is. It then looks to see what the prior week was to decide the rule on where to draw the line. It looks to see if you have a higher high week, a lower low week, an outside week up, or an outside week down. 5 rules. They're explained in full detail in my charting course. But suffice to say, the pattern is one of lower highs, lower lows, and most chart analysts would say that is a definition of a bear move in the market. I haven't put any filters on it yet. And in order to negate it, you've got to take out on the current pattern 15, 35, 60. There's other things that could happen. Should the market come down and take out this week's low and then turn up with an outside week up, the pattern would change again. But trying to say the what ifs, no. The only thing I can tell you at this point, 15, 35, 60 is a key number. Have we gotten back to the 18-week moving average? No, we have not. That is right here. We made one run at it a week ago. Now, this average has been climbing approximately, as you can see here, $10 a week, rough throw at it. And if that's the case, we're going to get up into the high 60s, 1470 area when the market reopens Sunday night. That's going to be my guess. So to hit that number, and often I say the 18-week or the 18-day average, that is where market often goes to figure out what to do next. It's what I call the line in the sand. Haven't hit it yet, so you can afford to get down there. In terms of the Bollinger Bands, this is when you were running them on the breakout of the sideways action. It exhausted itself. Past tense, done. Now the market's trying to figure out on the corrective mode, where will it find some support, or is it going to close under the 18-week average and throw the market back into the swing line down, bias down? Momentum-wise, we're already down. We've had this divergence in the market in terms of the market had lost its upside momentum right through here when the red line started getting back under the 80 level, and that was when the price was $14.92. You lost your upside momentum. You also broke through another key area. And since that point, we have been overall in a corrective mode. Okay, you're still correcting. You're not through at this point yet. Even if momentum turned up here, it takes a while to do that. When we come to the popular ETF GLD, it's very, very similar. When we lost the upside momentum right through here, the market started its correction. We haven't yet hit the 18-week average. There's no magic. You don't have to, but we're making a run at that level to try to find a support zone. Could it just get through it and head down? Of course it could. It hasn't, though. So until I know different, I contend that that 18-week average is often a support area once you get a market that's up and it wants to pull back into that. When I come to GDX, you're there already. Notice how, and I'll try to take this week off here so I can get to it. There you go. You've got lower highs, lower lows. Agreed? The market came to the 18-week average, right through there, bounce. This is what I'm saying that often happens is you hit that number. It becomes a pause area if you've been sharply above it and you pull back. Could this market turn bearish? Of course it could. Momentum's down, but it needs to close under that 18-week average, and so far it's been unable to grab any traction under that. The gold-silver ratio still favors on the longer-term chart the silver. Now, often, not the word always, when silver starts leading gold and prices start stabilizing, it's a pretender to the market. The overall metal market's doing better. And as you can see, you had this up to 93.85, you're back to 84.31. If we get under this area right through here, it could get very interesting because the 80 number starts coming into play. In terms of silver, we're in a corrective mode just like we've been in the other markets. You peaked out as the market, as you can see, lost its upside momentum right here. This was when it lost it. Now, the market had been over the upper Bollinger Band, peaked out, came back on this week, finished 1798 under this upper Bollinger Band, and the correction began. And it's been happening since then, as you could see. Will it make it to these areas? I see two levels of support, and I'm not saying they have to be hit, but typically, if you're going to make a full run, you go to the 18-week average. But is that number going to stay there? No, it's going to jump next week because of how the math is. This is an 18-week average. We're going to lose a low number back here. So it's been jumping to the tune from 1665, 1651, 1634. I'm comfortable saying about 10 to 14 cents it's been doing. That'll put the market up maybe towards the 1680 level. It's very close to where the last break low was. We'll see what it does on Sunday night. Remember, that number is going to change as prices go up and down, but that's where I'm expecting it. In the copper market, no surprise. What we had here last week was an outside week down. So we had lower highs, lower lows. You made a run for the lower Bollinger Band, missed hitting that number. The low of the week was 251.50. It was 250.80. The key is when you have an outside week down, you should not take out that week's high for the next week or the next 2 weeks, to be honest. And if you do, I look at where the closest moving average, depending on which way the market's going, in this case would have to be to the upside, or a Bollinger Band if you're over the key averages. That's the target. Market got there and it's stalled on us so far. There is no trend right now. You've got a lower low, higher high. You blew this out, so that's not in place anymore. In the platinum market, we've been in a corrective mode like you've been in the other metals. You had gotten over that upper Bollinger Band. You only stay over it 5% of the time. I don't care if the chart's weekly, monthly, whatever. 5% of the time. The algorithm handles that for the time frames that you've got. And the market peaked, and it's made its run now towards this 18-week average and the 100-week average. We'll see if the market can grab traction here. You would think platinum and palladium could get bids from industry if this really turns into a deal for everybody and the world starts turning back up economics, if this is a win for everybody. Momentum up in the palladium, trend up. In order to stall the trend, you've got to take out 1631, contract highs right above the market here, momentum up, bias up, trend up, and last, the dollar index. The daily charts have turned bearish already. You have not done that yet on the weekly charts. On the weekly chart, you have a lower low, higher high pattern. To get even the bias down, you've got to get under this 97.58.5 zone. Right now, that is the support level. Momentum is leading price. It turned down, and as I said, you're not trending. You happen to have, if you look at this, no trend yet in place. Oh, that's the news that I have. I went a chart too much. You know, one of the things I do in the mornings for my subscribers is I put out a morning subscriber video, and in it I cover the metal markets, the currencies, a whole array of commodities. It starts, and I start recording at 6 a.m. Central Daylight Time, unless there's some big issue that comes up, computers or whatever, and it's rare. This tape will be out, a video actually will be out typically before 7 a.m. Central Daylight Time. The idea there is I'm going to be able to say, buy here, sell there. This is what I want you to do. Here I'm talking the generalities of the market, what I'm thinking these indicators are pointing to. But what points do you get in and out? That's where I discuss it. The other thing I discuss, often you wake up in the morning, what's going on? Well, that's what I do. I start off every morning video because I've already, at 6 a.m., I've already gone through the news in Asia, the news in Europe. I know the morning reports that are due out in the morning. Are they important, real important ones? Are the market's going to consider them major or just another report of the day? Important, but not necessarily market moving. Today was a market mover, right? Because you're waiting all day to see what's going on with the trade talk. The cost of that, by the way, they run about 20 minutes, but you don't have to watch each section. There's a pull bar on the bottom where it tells you you're in the metals, you're in the interest rates, the currencies, wherever you're at, or on the side of the chart there'll be a lexicon. So it's very quick, and that's what I want. But I want to cover everything in one video recording at that hour. The cost, $7.95 for first 30 days. Now let's talk that. If you're trading gold, the minimum tick is $10 on a full-size contract, right? Silver market, 2 ticks. You've already covered yourself. Ticks. We're not talking very much here. What do you have to lose by taking a look at this and see if it fits in? I know people come and go. We don't keep every subscriber. We keep the vast majority of them we keep them. And that's because people want to be able to get to this. What did I think of the market at that hour? And it's up all day long. You can watch it. And even when I go away, I typically record. It may not be at that hour, but it'll be during the time frame. It includes our free mobile application because we use push notifications, not that you pay for a text. A push notification comes right up if you've got this installed. It says, Ira just posted his video, away you go. But you get to see our news, charts, the comments, and it's all streaming for you. You can even go to live quotes on it if should you decide. How do you get there? Go to www.iraepstein.com. Under research, you're going to be able to see morning subscriber video. Click that on. It answers all your questions, and that's where you sign up for it. You can also get to that page by clicking right here if you're watching YouTube. I'm Ira Epstein, horse from all this. You have a good day, and I'll talk to you tomorrow.